Ladies and gentlemen, welcome back to a cryptocurrency update. With the weekly candle close in 24 hours, there is a very important decision that Bitcoin needs to make. Does it get back above 61K and maintain the trends that it lost a few days ago and salvage them? Or does it remain lower and potentially try to reconnect with the 4-year cycle later down the track? Right? There is also a third scenario, which is that we do something in between by maintaining the pink line on the screen here. It's a little bit of a complicated situation we are in here because we're in between trends, right? We haven't totally broken down from the trends we lost 3 days ago yet, although we are threatening to do so. And we have some clarity offered by the 4-year cycle, although the clarity is being diminished by the loss of the trends from a few days ago. So very complex situation, and by tomorrow when we see those weekly candle closes, we will have a lot more clarity than we have today. But today I need to warn you of what you need to look out for tomorrow, and then we can discuss what actually happened in tomorrow's video. So guys, before we get into it, go ahead and check out the Bitfinex and BingX exchanges. Bitfinex is offering you 5,500 USDT in rewards for signing up, and BingX is offering you 4,000 USDT in rewards for signing up, a chance to win those rewards, I should say. And if you do not win those rewards by signing up with my referral link down below, you will get a 15% trading fee discount for life, regardless on every single buy and sell you make on the exchange. They are both global non-KYC. They have both never been hacked before, and they're both very low in trading fees to begin with. Again, with my links below, the bonuses and the trading fee discounts are available. One more note quickly here. You have literally 12 hours remaining to take advantage of the VIP sale on Telegram. A 90 USD discount for membership until April next year is on sale. There's only 12 hours remaining. If you want trading signals, if you want access to a group chat, that's the time to do it, and now is the time to do it because, again, we've got 12 hours remaining. So check it out, guys. It's your last chance there. Let's get into the content. Over the last 3 or 4 days, as you might know, Bitcoin has broken down from a very critical level. It broke down from 61K, which was a monthly chart level, okay, also acting as medium-term and short-term support, of course, but it was mainly a monthly chart level, stemming backwards from the highest ever monthly candle close in 2021, and scrolling right across, you can see all of these monthly candles have been bouncing or acting as resistance on that price region. Now we are hovering below it. So this is an inherently high time frame support zone at 61K. We've now flipped below it on the medium term. And the question becomes, can we salvage it? Can we get back above it in time? Well, obviously the monthly candle close is quite far away, but what we do have here is the weekly candle close, because not only was 61K important from a monthly chart perspective, but it was also important from a weekly chart perspective because all of the weekly chart indicators, such as the pi cycle center lines in green and yellow on the screen, but specifically the green line, okay, sits at 61K right now. Now, why is that line important? Because, as you can see in prior high price history, if we go back to prior bull markets, that green line has been basically the bottoming indicator for every single correction we have seen in prior bull markets. In 2017, it held the entire way. Even in the first bull market we ever saw for Bitcoin, it held more or less. As you can see, it was retested there near the top. It was retested again over here, acting as resistance over here before getting above it. These are very important levels in yellow and green, but specifically the green one is kind of a last resort level. Even in the 2018 bear market, you can see more or less this acted as kind of the compressing factor that drove Bitcoin to eventually crash downwards to the low. And then finally, once we got back above it, we entered a massive uptrend. In 2020 and 2021, again, holding for support the entire time. We lost it. We crashed into a downtrend. When we got back above it, we flipped it for support and went up it again. And when we dropped below it again, we entered a decisive bear market. So this green level and the pi cycle levels in general are incredibly major, but it's not only the price cycle level that matters here. Again, it's bull market support band, which is right on top of the price cycle right now. So my main point is not only is 61K a monthly chart level and also a medium term support zone, as you can see all these bounces occurring at 61K, it's also a weekly chart level. And what we have in just 24 hours or less than 24 hours is the weekly candle close. And seeing as this weekly candle close is happening in 24 hours, and we know that 61K is not only an important monthly chart level, but also an important weekly chart level. We haven't actually closed the candle yet that has seen the breakdown. So we are below the critical weekly chart level indicators on the weekly candle, but the weekly candle has not closed yet. So we could have an opportunity here to swing back to the upside in the next 24 hours and close within or above these weekly chart indicators, and hence maintain the bullish price structure of the markets in general. Now, if that does not occur, In the worst case scenario, well, not in the worst case scenario. The worst case scenario is we don't close above anything and we just drop, okay? But in a kind of bare minimum scenario, we would want to be holding this pink ascending support line, right? This pink ascending support line is the bull market support line. It comes backwards from October 2023, also going through to January 2024. And right now you can see we're hovering in that price region, bouncing up above it, rejecting, and just kind of lurking around. We've got short-term resistance here at 58.5K. There's various indicators in this region, but right now we are in what I'm calling the hurdle. And the hurdle is between these two green horizontal levels, between 61K and 56.5K. That is an area of massive liquidity and an area in which we can see easy and swift rejections from. But obviously, in order to get back above if we get above the hurdle, we're getting above 61K, which is the ultimate key zone. So that's why I'm calling it the hurdle. It's like we're coming up to the hurdle, we're trying to jump over it to get back into a safe level, but it's going to be quite hard to do. So a lot is going to rely on this weekly candle close. The best case scenario for Bitcoin is getting above 61K for the weekly candle close in 24 hours. If we fail to do that, we need to, at a minimum, maintain above this pink ascending support line. Now, if we fail to do both of these things, right, which is actually a reasonable possibility that we do that, given the fact we are in a major of an area of major rejection, basically. If we fail to do either of those things, so if we close the weekly candle, let's say below 57.5K or below where we are right now, which again is not unlikely, we have an opportunity to re-establish our connection with the 4-year cycle, all right, and go for a top in late 2025, meaning that I don't think we're in a bear market regardless, all right? I think the macroeconomic data right now is very clear. I think the economy in general, I think the traditional markets, I think all other markets except for cryptocurrency are doing very, very well because the macro environment is allowing them to do very, very well. It's only crypto right now that's getting hammered, okay? And this is something I've brought up many, many times, but I'm going to bring it up again here. If we go to the S&P 500, okay, and we bring up the daily chart, which we're on right now, and we go ahead and overlay the Bitcoin chart to the S&P 500, what we can see is that there is significant deviation between the S&P price action and the Bitcoin price action right now. You can see for the last month, we've seen not only a non-correlation, but a definitive and decisive reverse correlation between Bitcoin and the S&P. The S&P 500 is breaching new highs and Bitcoin is down massively. Now, this could be due to various things such as the Mt. Gox selling, such as Germany selling Bitcoin. They actually bought back Bitcoin earlier today. Many things that are going on exclusive to cryptocurrency, but it also could just be manipulation, right? And there's probably, to be honest, a mixture of all three of those things. So I don't see the broader markets as bearish right now. And I know for a fact that historically Bitcoin has been linked to the broader market environment. And given the fact that the broader market environment is bullish, it doesn't really make much sense for Bitcoin to actually go down here. And also another point is, if we are, for some reason, to enter a bear market against the odds on Bitcoin, that would not be a traditional bear market anyways, because a traditional bear market has only come with a traditional cycle. And if we top out here, that's obviously not a traditional cycle, therefore we can't expect a traditional bear market. So I see kind of, a couple of scenarios here. The first scenario, and this is what I very extensively went into yesterday. I highly recommend you watch that video yesterday, right? If you want full info on the 4-year cycle and how we could reconnect to it, go ahead and watch that. But my scenarios here are quite clear. We've got a weekly candle close in 19 hours. The ideal thing we can do on this weekly candle close is close above 61K. If we fail to do that, we need to, at a minimum, close above this pink ascending support line. If we fail to do that, we have an opportunity to reconnect with the 4-year cycle later, and then we can see basically a few months consolidation or whatever. It doesn't really matter what we do. As long as we remain in a bullish macroeconomic environment, we can still reconnect with the 4-year cycle, and that is always a possibility that's on the table. But the ideal scenario here is getting back above 61K for this weekly candle close. That is what we need to be looking out for. If we don't do that, it will be unfortunate because we will be in an uncertain territory, right? It's all well and good. I'd love to reconnect with the 4-year cycle. That sounds great. But it's all well and good saying we're going to reconnect with the 4-year cycle. The problem is a lot of these trends which we have broken, a lot of these indicators, a lot of these support levels which we have broken have been the trends within the 4-year cycle historically that have given us clarity within the cycle so that we can trade it effectively, right? If we lose these trends, we can maintain the 4-year cycle because the 4-year cycle is based on the tops and the bottoms, but we lose the clarity within the cycle to know exactly what's going on. We're just kind of blindly waiting for the top or blindly waiting for the bottom. The only reason the 4-year cycle, one of the reasons the 4-year cycle has been very, very tradable and predictable is because it has these micro trends within the 4-year cycle, such as we're going to always hold this level during the bull market, that have made it clearly tradable because you can buy at that level. Now, the problem is we have lost those levels now, and unless we get back above them tomorrow, we won't have the clarity that we've previously had within the 4-year cycle, although it would still hold. We just won't have that clarity, so it'd be harder to kind of predict and trade. So I think the best scenario is getting back above 61K, labeling this entire thing a deviation, and continuing back to the upside. That is the best case scenario. That is also, unfortunately, seeming to be a very difficult thing for Bitcoin to do. We've got a lot of work to do in the next 19 hours if we're going to do that. This is a major zone of liquidity, and we will need to break back within major indicators. So we're going to need some sort of event, some sort of strength coming from somewhere. We need something to materialize here if that's going to occur. Again, regardless, I don't think we're in a bear market, but this 24 hours is going to be very, very important. I'm going to be watching it very, very closely. So guys, thank you for watching. I hope you enjoyed the video. Before we end off the video, I just want to remind you one more time about Bit2Nix and BingX. They're both 15% trading fee discounts being offered with my referral link down below, as well as a 5,500 USDT bonus for Bit2Nix and 4,000 USDT bonus for BingX. Just for signing up with my referral link, you'll get a chance to win those bonuses. And we've got the 12-hour final reminder for the VIP sale. If you want to join up that VIP group, you've got 12 hours left to do so. So get in there now. And finally, the Crypto Academy's Become a Trader 10-unit course is actually on sale as well. This course will teach you everything you need to know about trading, right? We're talking about market psychology, but also TA and charting. Everything you need to know really to become not only a good trader, but a professional trader. This is the knowledge that myself and MegaWell Crypto use on a daily basis. It's all available in that course, so make sure to check that out with the website link down below. Thank you for watching, guys. Hope you enjoyed. I'll catch you tomorrow.